Okay, folks, welcome back. This is our midweek review for the ST Mentorship for September 9th, 2020. And you guys know what day it is. So just as a quick reminder, if you haven't made your monthly payment for September's content, tomorrow, when we start business here locally, anyone that has not made their payment, they will lose access to the mentorship forum and your studies. If you do lose access, you have until this day here, October 1st. If we don't receive your payment by that date, you will be removed from the mentorship on a permanent basis per terms of use. Alright, so that's the business there. If you have to restore your account by the 1st, you will be expected to pay a $10 service fee, also part of the terms of use. Alright, so I have to tell you that, guys, as a means of keeping up with everything. So here's the dollar index. Okay, so I want to look at a couple things, and we're not going to spend a whole lot of time, and the teachings for this week will be on the weekend edition. This is a review. I want you to take a look at this candle's wick or tail here. If we disregard that and focus on the consolidation, we see the smart money reversal, reaccumulation, and then finally clearing above the original consolidation. So we see a market maker buy model. Now that it's in the chart, you can see and appreciate why I was saying we're still going to stick with the narrative: bullish dollar, bearish foreign currency. If we add the annotations, okay, you can see the buy side liquidity pool here. I'll show you this level in a moment, but I want to show you again by cleaning this up, all of this wick here. Okay, and it's going to make it white, so it takes it away. And this is what you're used to seeing. No craziness in here. Okay, this is all a standard market maker buy model. Can make it a little bit more confusing. And that's why we like to disregard big wicks and tails, because they're stop runs. Alright, so you've seen me do that before when we saw the election in 2016. We did similar things there where we removed a big wick, and go back and watch those recordings from 2016 and you'll see I'm doing that same type of thing there. Okay, so we have made our way up into this area over here, and it's an old point of order flow, and I'll show you when we go out to other time frames. But we have the original buy side liquidity here at this consolidation, trading down, took the sell side liquidity here, smart money reversal, and then we start building on long positions to take out this area of buy side liquidity. So until that occurs, we are bullish. Now that we've seen this trade too, and I'll go out to a daily chart real quick. Alright, it is the rejection block on this candle right there. Okay, that's what that black line is. And then above it we have our SIBI, sell side imbalance, buy side inefficiency. I mentioned that could be a potential upside. Now we have one daily candle down, and let me zoom in just a little. So this down close candle, I'm not saying that this is the top. Okay, I'm going to give it the willingness to see if it can continue and press up into this here. So we're going to stay with the bias that is short-term bullish on dollar. Now what changes that, if we trade below on a closing basis now, below this candle's low. Okay, so if we close below 93 big figure, then I'm going to look at this as a continuation of the consolidation sideways with a modest bearishness. We might resume going lower at that time, but I'm not looking at that at the moment. I'm giving it the opportunity to continue and trade higher. Now we did have this candle's high, this big range, and then we gave up a lot of that range and came back. Didn't quite close it in. So if it's bullish, I'd like to see it stay open here and just start to trade higher. I'm not pushing it hard. I'm just saying that I'm going to stick with that narrative until we close below Tuesday's low. on 93 big figure on dollar. 15-minute time frame on the dollar index. You can see we had a nice fair value gap in here. Trade into that, fill it, run, then consolidate back down in. Relative equal lows are kept. We rally. Rejection block on the daily. We break down. And we have a breaker. This high, low, high. Higher than this one. Clearing relative equal highs. This is our breaker. And we have a fair value gap overlap. So we could trade up to that point, and there might be some sensitivity. If we trade above it and come back down into as a support level, then we'll probably continue moving higher on dollar index. If we just roll over here, fair value gap, liquidity here and here. So all of this takes your attention to this level here in the bullish order block. Okay, so just consider that as a possible downside should foreign currency start to trade higher and dollar trading lower. I'm giving it the benefit of the doubt and see if it wants to go higher. Okay, so I'm really focusing over here, looking for it to get above it and find some support and rally and take out this high here. But that's all I have for dollar. Now let's go over to the euro pound. All right, so here's the euro pound. This is an hourly chart, and I mentioned on the weekend review prior to this video that both sides of the narrative could be sold. Like, I could give you that we're bearish because we went up here and hit that, and then we also had this area here, fair value gap, mean threshold, order block, optimal trade entry, and this could be a buy. Okay, and because we were going into the weekend, I wasn't confident because I don't know where we're going to open up. Okay, so I know I didn't check in recent emails since this weekend because I'm still catching up with the emails from 6.5 to 7 weeks ago. So that's how far back I am. I'm late getting through all that. It's just so many emails, folks, and it just keep piling up. So I can't really keep up with it. It's getting to the point where there's so many of them. I can't really answer them all. It sounds terrible, I know, but I'm doing my best. I do several hundred of them a day, and I have to do other things, and I also have a life to live and be a part of my family's life too. So I know that you have questions, but the ones that I'm getting are really questions that are answered by just being here and over time gaining the experience and me teaching more on the topics, because there is not one topic in this mentorship that I have exhausted yet. So every topic that you've come across in the core content, that just think of that as introduction. It's introduction to the concept. It's not a complete teaching. It's not a complete treatise on everything about it and how it all fits together. So that's, again, this is what mentorship is. There's all kinds of moving parts, and it takes time for me to pull all these things together, and you get it over time. You can't learn it like, there it is. And I can't just give you a quick answer to an email. How do I trust breakers? How do I know it's a market structure break? Well, those questions are really answered in lessons I've done in the core content and in commentaries. You just have to keep doing it over and over again to get the experience. But anyway, the point in saying that was, because of the weekend, I don't have where we're opening on Sunday. So when I did the video, the markets were closed. So I don't know where the central banks will open the market on the week. It could gap it up, it can gap it down, and because of the dual nature of the way the market closed here, I don't know. So I have to wait to see how we open on Sunday. So when we open on Sunday, it gives me a better picture. If it opens unchanged, then it will be most likely trying to go higher off of the discount array that's being shown here as a bullish order block fair value gap. If we opened higher, gapped up higher, then that might be a opportunity for it to trade back down, close the gap, and then trade higher. Or if we gap lower, go back up, fill the gap in, and trade off of the breaker that exists here, because we had a high, a low, a higher high. So if we gap down and traded up here, then I would have been more inclined to sell short and attack these lows here. Okay, so I want you to understand there's context of what I'm doing, why I'm doing it. there's an absence of information that I'm waiting for, because over the weekend, anything can happen. They could drop a bomb, in, Germany, and start all kinds of wars. Okay. And you're not without a number of things that could fall right in line with 2020. This year has been providing us all kinds of science fiction stuff. So I'm not comfortable giving you an opinion over the weekend to how we're going to start the new week. I'll give you scenarios where I think it might trade to and levels that are important. But short of that, we're going to wait like we always do. We want to see how we open, how we trade. And I cover this. I cover this in the day trading. I cover it in the short-term trading. How we open, I work with the weekly profiles that way. But we have to know what the weekly open is. And that gives us a lot of storyline to what side of the marketplace we're going to work on. It's similar to what I taught on YouTube last night, where we used the economic calendar. If we look for things that are in the calendar, that gives us insight. But we also look for things that are not in the calendar. The absence of GBP news says that there's really no manipulation on cable. So it's going to be able to freely trade. Whereas Euro has a big event tomorrow, and after that it has one more event. But prior to that, there's really nothing going on. So it gives us insight. And that, again, that's what teaching you as a mentor, and a student under me, that's what you get when you're involved with my teachings, because it's not a matter of make a video, write a PDF, and then you understand it. It's there's so many people in this group, especially the new group that just came in recently in the last 3 or 4 months. They are in a hurry because they want to catch up to the first group. You're never going to catch up to the first group. They have more experience. They're always going to have more experience than you. So get that out of your head. Okay, so try not to wrestle with, it's not plan A, plan B. It's 2 scenarios. One will pan out more than the other when there's more insight, more information, more data to work with. Because if you're using algorithmic theory, you have to have arrays. You have to have information to go into it. And then that calculation of following a procedure and process that you're learning through mentorship, then you'll have an understanding what you want to do when you see the new week open. Okay? So with that said, you can see we open up relatively unchanged, and then pow, starts to trade higher. Your eye, if you're scrolling back here, you'll see the relative equal highs back here. Okay, so that could be a potential draw on liquidity. It's wanting to go higher, and if we look at the range from this high down to this low, we're in a discount market still. The market rallies higher, trades up, and then finally clears the buy side liquidity pool, and now we're sitting here. Okay, so you can see how all those things overlap, but you have to have the information that's given only when the market opens for the new week. Okay, so while it gives us 2 scenarios, like I said, I can't go in and just roll the dice, because that's not how I trade. That's not how I do analysis. I need information, and when the information is supplied to me, you can go back and watch the video. You can hear me say clearly that this is a buy, but this is also a sell here, and we're going into the weekend. So what do? You have to wait to see what we trade like on the open. And there's a lot of things you can derive from the opening price, how it opens, where it opens, how it trades going into midnight on Monday. There's so many things that you'll learn, but you have to have the time watching it, seeing it unfold, and appreciating that and gleaning the experience from that. You're not going to just, watch a video and have it. It cannot be done that way, folks. It sounds like I'm kicking the can down the road. I had first group say that when I first started teaching, and they said, "Oh, you just keep kicking the can down the road. You could have made this all done in a 1 hour video." No. No, I can't. There's so many other things we got to cover, and it just simply can't be done. So anyway, without going into a more rant, I really want you to understand and have a balanced, objective view of when I say it's not high probability. because we're waiting for more information. It's in a specific condition in the marketplace, and I'm not simply willing to stick my neck out there on a block, but I co-sign a direction every single time we sit down. I told you I'm looking for a higher dollar. I'm looking for the dollar to continue higher and foreign currency to drop lower. Okay, and I gave you more insights last night in the YouTube video, and I'll actually give you an amplified version of that with the teaching on this weekend. So there's a little bit more information that I'm not going to show you here. It'll be in this weekend's discussion. But nonetheless, Euro pound went up higher here. That sets the stage, as I indicated and talked about last night, that cable would be weaker. Now, if you remember, I was hands off. I didn't want to touch cable. I didn't want to do it. And I felt like they could still take that pair higher. That cautionary stance is fine. I don't feel like, because I missed Monday's trading on cable, feeling like, oh, I missed out. I feel like a fool. No, that's what you do when you have a process. You're not trying to capture every single price swing. You're looking for the setups that make the most sense, that you can frame risk efficiently and still allow for probability to be in your favor. Going into Friday's close, I don't know how we're going to open. I don't know what's going to happen over the weekend. I don't know any of those things. Okay, so, but you did know dollar was going higher, and you do understand this relationship, as I talked about on YouTube. That stuff's taught in core content, and I've actually taught a lot about it in the weekly commentaries as well. So it's not alien to you how to use the cross of Euro pound. But last night's lesson I felt was a pretty good one, and you can use that in conjunction with what you've been exposed to in the mentorship. So this obviously sets the stage for lower prices in cable and stagnant prices in euro, which we're going to transition into now. So we go over to euro. All right, so here's a euro dollar, and again, hourly chart. And you can see it's just rather ugly market action. It's just held in an obvious consolidation, which is indicative of how that euro pound cross was being sent higher with this pair being held and dropping cable. That's what causes euro pound to rally. If we look at the annotations here, we can see we're in a clear consolidation, and we'll drop into this fair value gap when we go into a 15-minute time frame. But for now, I just want you to see that how we did drop down below these lows, not by much, and then today we rallied up hard at the time when the dollar swept its buy-side liquidity pool, as I showed before we transitioned here. Also at the same time, we traded down into our lower level objective on cable. Okay, so the bias is bullish dollar going into this week. Wednesday, we're here. Now, tomorrow's news driver is euro based. So it's high impact, it's bank related, and that's what I think this pair's been holding out for. Does it find an opportunity to finally crush through that 1750, 1740 level tomorrow with the news that comes out in New York? We'll have to see. I'm not trying to be smart and stand in front of that. I don't know what they're going to do. Okay, I just simply want you to appreciate the risk here, because so many times you've seen me say things and it pans out to script. I am not looking at the market right now saying I have a clear indication of how it's going to unfold. I don't have that. I'm just hoping that we have a big move tomorrow which creates displacement, and I don't care if it goes higher or if it goes lower. As long as it gives me an expansion and an imbalance, then I'll have all kinds of opportunities to work with. But right now, we're still in this range, so the narrative stays the same. All right, so everything going into this is the same. Euro pound bullish, euro consolidation, cable lower, dollar higher. Okay, I'm sticking with that until proven otherwise. All right, so if we drop into a 15-minute time frame, all right, you can see the fair value gap over here. Prior to this high forming, we traded down, closed it back in here, so we had buy-side delivery, sell-side delivery, balanced price range. You see how I had an inability to get back above it? Extend that out in time, consequent encroachment. Price trades right up into that. And I love how we went below this low here, and then below this low here, below this low here, and then below this low here. Trading below all the other lows I've mentioned on the hourly chart, and then we had this run here after dollar hits its objective and cable hits its objective. Then this pair is allowed to rally, and euro pound then declined. So all of this here matches out with euro pound, and you'll see a lot of details that I'm not going to cover here because you can do that in your own study. All right, so let's move on into, all right, so here's the British pound. This is our hourly chart. And over the weekend, I told you before we opened up for the week, I said, I like this buy side liquidity pool, whether we trade above it and go lower or trade through it. Either scenario, I would like to see it trade through that. And we didn't do it at all. It didn't simply just open relatively unchanged and then rolled over right from there. So this is one of those instances where in the past I've had individuals that were very cynical. They would just say, see, you were wrong about that. You go back and watch the video and you'll hear me say, that's a condition that I would like to see. I would like to see that. So in other words, I'm not comfortable selling short here on Sunday's open because it might spike up through there. Even if it's going to go higher longer term, going through that is likely to occur. If it's going to go above that to clear the buy side liquidity and then drop lower, that's possibly in the cards for it to do that. Because that's a likely scenario, I'm not comfortable trading here. But if we break down further, which is taking out this low, okay, we do it here. So on Monday, we have the market trading up into this 15-minute area of fair value gap. I mentioned that. Go back and watch the video. It's very clear. I said, take that through, and if we get below it, it might act as resistance, and that might be an area to look for a short. There's what's missing from YouTube video last night. Okay, so you're getting more information here. I'm not teaching mentorship as much as you feel like I am. I'm just demonstrating my creations. I'm not teaching how to use it. You're learning how to use it here. Okay, I'm giving you the greater depth. So don't run off thinking, oh, well, mentorship is on YouTube. No, I'm just putting those out there, sprinkling the YouTube channel with it because there's so many goobers out there that are now trying to include it in their YouTube videos, and I'm taking them down. So it provides me foundation for YouTube to say, oh, yeah, this is his stuff here, and let me take that down too. But nonetheless, it hit the fair value gap after, it'll be very clear when we go into our 15-minute time frame, but we went below the low here, had a fair value gap there, and then it closes the fair value gap and trades back to the previous day's low, but it's inside of the range of the previous day. Remember, take the range in half. If it's bearish, you're going to look for a short from the 50% of the daily range to the low. Here's your short. Now, obviously, oh, that's obvious. That's a low, or a floor becomes a ceiling, or a support becomes a resistance. Okay, yeah, I'll grant you that, but that's not what I would be looking at it. I'm looking at, there's an imbalance, and it's trading up into the previous day's range. I'm not looking at just simply trading at that low. So I'm not looking at support resistance or supply and demand. I'm looking at the imbalance and returning back to a key level, which is a daily low. All right, so I mentioned in the video last night on YouTube that the market can stay in a range. Once it's defined a range, it can stay in that and frustrate you. So if you're looking to go short or even looking to go long in here, all this time, these are hours, and it's not moving. And then finally it drops down below these relative equal lows, and then we get the next day here on Tuesday, we open up, clear the imbalance here, creates the high of the day at 2 o'clock in the morning, runs lower, and then creates that New York session sell-off. And finally today, we rolled overnight into our fair value gap on the daily chart. I said that we would likely trade down into. It traded down into it and a little bit below it, below the 129 big figure, and then reacted. I sent you a notification on the YouTube channel community tab, and I got to some emails from folks that are in the mentorship, and they were saying, Michael, you say in the YouTube videos to hit the subscribe button and hit the bell notification, and then you'll get alerted to any time I make a video posting or these posts to the community tab. I was under the impression, and I would have, put money on it, that, every time I put one of those community tab updates or, posting on the community tab YouTube channel, that you was getting a notification if you had the bell icon toggled. And it turns out that that's not true. So I don't know what I'm going to do. I'm not going back to Twitter, and I'm not going to have Instagram. So I'll have to figure out what it is. I may have to do just simply very, very short videos that I can upload. And that way, if you have the bell icon toggled, you'll be able to get that way. But the videos have to be really short. Otherwise, it's, things going to happen, and there it is. I'm not trying to operate a signal service, but I do want to prompt you, like you saw today, when we were trading at the lows here, it's time to pay the trader, and it hit our target, and then boom. I was in another YouTube channel live stream today. I'm not going to mention the person's name because they've never done anything for me to be ignorant to them, but they were watching the pound yen. And they were expecting the pound yen to drop, and I'm looking at our levels here. I'm thinking, man, I know when it hits that level, it's likely to draw back up into all this area here, and you can see this little magnet here. That's where the next buy side liquidity pool is. So I'm looking for cable to react here and possibly draw up into this level here and offset some of that euro pound influence, and maybe allow euro to drop tomorrow, and then cable consolidates. So these are all the things I'm doing, and I watched as cable traded down here, and it was just like everybody in that live stream, in their live chat, it was just like, whoa, wow, what the hell, all that reaction that you usually get to when you don't know what's going on, and then the market starts popping off. And they're looking at really low time frames, and all of the run up, and they're like, wow, 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 in the pound yen, which wasn't even all that big of a deal, but nonetheless, it's just fun to watch the retail traders' reactions to things they don't even see coming. And that's one of the beautiful things of being in this community, is because you're learning where these reactions are going to occur. Like, about these two lines down here. That's the fair value gap on the daily chart. If you don't believe me, stop this video right now and go back and look at Sunday's video, and you'll see there's really two thin lines I add on the daily chart for cable. And I mentioned also, so this is proper context, because again, I want you all to really understand what I was saying on Sunday. There is a fair value gap over here, okay, with the consequent encroachment. And we traded completely down into that on Monday and traded back up to it here. Notice it's having a difficult time getting back above it. Why is that happening? Is it because this day's low? No. It's just one part of it. What's actually happening is we rebalance this buy side imbalance, sell side inefficiency in entirety. Look at the candles of the bodies. Forget the tails. Look at the bodies. They're telling you the storyline. Look at the bodies over here. They're telling you the story. Okay, I'm not making these things up. Okay, this is why my stuff is completely superior to everything else. It's not supply and demand. It's the algorithm that books this. You're telling me, you're going to sit here and tell me that this is support and resistance, and the bodies are respecting the exact level that I outlined over here. You know this as a fair value gap. I have 30, 40 different lessons that go beyond what you already know about fair value gaps. Like, you don't know it all, okay? These things are like fortune tellers. They simply are the secret things that you don't see in price action. Now, even with me putting a demonstration of a fair value gap on my YouTube channel, people can start looking for it, and they do it all the time. On TradingView, they do it in their YouTube videos, and you see them, oh, this is an imbalance here. This is an inefficiency right here. They think they're hiding themselves, and, they don't have it. They don't know what they're doing. So when you see these effects in price, and then it finally breaks this dashed line, what's this dashed line? Go back and watch the video on Sunday. I said, if we get below the mean threshold of this down close candle on the daily chart, which I'm going to take you to in a moment, if we get through that, then we're going to go down to this level here, and over here is the lower level buy side imbalance, sell side inefficiency, fair value gap. But before I change from this chart here to the daily, I want you to remember this area here. I'm looking for price to draw to that and maybe into this area here. All right. But this dashed line, let's take a look at that on a daily. Now it's going to be some annotations cluttering the chart up. So I'll have to zoom in here. All right, so this red line here, I said if we traded through that, that's the mean threshold on the bearish order block. We trade through that, and then we're going to go through all this, all over here, and then we have these levels here on the chart. Okay, and I'm going to toggle these annotations off so you can see the wick going down into it. See that? And we traded into it there. Okay, so with this understood, let's go back down into that hourly chart. So we trade through the mean threshold, which is that dotted line here. We trade through it, so you know it's likely to go where I told you on Sunday. What was the condition? It had to do what? Trade through the mean threshold. If we trade through the mean threshold, don't look at that as a buying opportunity. That was exactly what I said on Sunday. Don't think mean threshold, bullish order block, and go higher. Don't think that. If it goes down and through that, which it did it here, it does not need to close. Okay, the algorithm is saying, okay, it went lower, then we consolidated. Then we drifted a little bit below it, came back up into the low end of the fair value gap and the mean threshold of that daily bearish candle, which is a bullish order block. But it's not going to be a buying opportunity. So its role reverses. And this becomes a resistance point, coupled with previous day's session lows in New York and the fair value gap, and the fact that it's become a balanced price range. So the market is likely to go lower. So you're getting everything that was not included in last night's YouTube video. All right. So let's scrunch this up a little bit. There we are. So for your homework and to arrive at what I'm going to outline this weekend, study this fractal, all of this price action. So make your chart look kind of like this, all the way back to the 20th of August and to here. Okay, so you would have your chart look like that, and study that, because we're going to go into great detail with all of this for the weekend edition price action lesson. And that's going to be it for today. I will talk with you all by way of YouTube tomorrow evening, and I'm going to do absolutely my best to have the weekend edition video online by 9 p.m. Friday night. Okay, so have yourself a pleasant rest of the week. Be safe, and I'll talk to you next time.